So today we'll discuss about what is account. So in the last chapter we have already discussed about the accounting equation, and we found that the accounting equation was asset equal to liabilities plus owner's equity. So account means the record of increase and decrease and a specific item. So whether it is asset or liability or owner's equity item, so increase or decrease in a specific asset or liabilities or owner's equity item is called account. So that means what are the examples of asset? Maybe cash, account receivable, maybe equipment, furniture, but this for each and every item is a separate account. And also liabilities like account payable, note payable, salaries payable, these are also separate account. And any kind of revenue, expense, capital or drawings, that are also separate account. So accounting is accounting record of increase or decrease in any specific asset, liabilities or owner's equity item. So, to know the features of an account, we can draw it as a T format to determine the features of account. So, an account has three parts: title, left side and right side. And this left side is called the debit side and the right side is called the credit side. So now the question arises, what is debit and what is credit? So in accounting, debits and credits are directional signal. Debits and credits are directional signal. So of course, in mathematics, we use different symbols like plus, minus, multiplication and division sign. In a traffic system, we use three lights to understand the signal. In accounting, two signals are used, that is called debit and credit. Of course, it has some meaning. So debit, we can say who are receiving the benefit, that is called debit, and who provide the benefits, that may be called credit. But that means their debit and credit will give us the proper direction. So debit and credit. So that means in an account, suppose we are giving the title as cash. So that means we are going to discuss about only the cash account. So there are two sides. One is left side, another is right side. We have already mentioned. Why these two sides? Because we have already discussed the definition of account. We find that when an item may be increased or decreased, they are called account. So one side is for increase and another side is for decrease. So according to the features of account, so left side is the debit side and right side is the credit side. So suppose this is a cash account, and if we put any amount in the left side, that means we are debiting the account. And if we put any amount in the right side, that means we are crediting the account. So we can say debiting the cash account by 100, and when we write 70 in the right credit side, that means we are crediting the cash account by 70. So for increasing or decreasing of this cash, we might use debit and credit. So suppose several times this cash account is debited and several times this cash account might be credited. So we can find the total of these two sides. So this is the total debit side and this is the total of the credit side. So we find the difference of 13. So what should we say about 30. So we should say this is the balance of cash account. But the question is, who is balance? So of course it is debit balance, because the total of debit balance is higher than the total of credit side. The debit signal amount is higher than the credit signal amount. So that's why the remaining balance should be debit balance. So if it is 170 rather than 70, what will happen? So then the balance would be 70 credit balance. So why credit balance? Because here the total of the credit side is greater than the total of the debit side. That's why it is considered as credit balance. So now the crucial stage is the debit credit procedure. We have understand if we put any amount in the left side, that is debit. If we put any amount in the right side, that is credit. But when an account is debited and credited, so this is our next topic, the debit credit procedures. So in my point of view, this is also not very difficult to understand the debit credit procedure if we know one thing, that is accounting equation, and it is easiest thing to remember the accounting equation that was discussed in the last chapter, that is assets equal to liabilities plus owner's equity. If you know this accounting equation, you should not forget the debit credit procedure. So in our equation, it has also two sides, the left side and the right side of equation. The features we have discussed from the concept of the account. So if we put this structure into this accounting equation, so we find our accounting equation is divided into two sides, that is left side and right side. So we already know the left side is known as debit side and the right side is known as credit side. So that means the basic signal of asset is debit. Why? Because it is situated in the left side of the accounting equation, and as the liabilities and owner's equity are situated at the right side of this accounting equation, so we can say liabilities and owner's equity's basic signal is credit. So this is we have to remember, that is the basic signal of debt asset is debit and the basic signal of liabilities and owner's equity is credit. Suppose in a mathematical example, I have 10 taka. So in mathematically we should write as plus 10. If I say I receive more 5 taka, that means we should write plus 5. But when I say I have paid the money 7, taka 7, that means that should change the symbol and we use the minus 7. But if anyone's value is minus 20 and I say the value will increase by 7, that should be increased into their basic signal, that means minus 7. And when I say decrease the value, that will use plus. So that means we have to find out the basic signal of each and every item. So from the account perception, as the asset situated in the left side, the basic signal of asset should be debit, and as the liability and owner's equity situated in the right side, that are considered as credit. The basic signal is credit. So now, suppose I am asset. So my basic signal is debit. So if I increase, so of course I will increase into my basic signal. That means when the asset increase, that should also be debit. But if the asset decrease, then the signal should change. And in accounting, there are only two signals, debits and credit. So that means when the asset decrease, that should be considered as credit. So now if I say about liability, so liability's basic signal is credit because they are in the right side of accounting equation. And if the basic signal of liability is credit, now suppose liability is increasing. So if the liability increase, that should increase to their basic signal. That means when the liability increase, it is also credit. But when the liabilities decrease, of course the signal should be changed. So decreasing liability should be debit. So this same concept should also use for owner's equity. So the owner's equity's basic signal is credit. So that's why when an event occurs that increase the owner's equity, that should also be credit. And when an event occurs that decrease the owner's equity, that should be recording as debit. So in the last class we have already discussed owner's equity can be changed in 4 ways. In 2 ways that they can be increased, in 2 ways they can be decreased. So by capital and revenue is increase the owner's equity. So we can say when the capital and revenue occur, that will increase the owner's equity. That means capital and revenue are credit. And by drawing an expense, owner's equity is decreased. So when the drawing and expense occur, we can say drawing and expense are debit. So this is how we can easily measure, we can easily find out the debit credit. Suppose I am saying that owners invest money of taka 10,000 to the business. So what is happening? Yes, we have received cash of taka 10,000, and who give this 10,000? Owner give us the 10,000. So what are the changes made in cash account and the capital account? So cash is one kind of asset. So cash is increasing. So we can say this cash account should be debited. And capital is another change. So of course, capital is increase the owner's equity. So when the owner's equity increase, that should record as credit. So we can write as cash should be debited by 10,000 and capital should be credited by 10,000. Suppose I purchase an equipment of 7,000 on credit. What does it mean? That means I purchase an equipment. So equipment is also one kind of asset. And we are purchasing it, that means that it will increase. So asset increase. So when the asset increase, that should be debited. So equipment should be debit as the asset is increasing. And I have said this equipment is purchased on account. That means we are not paying money. That means the liability will increase. And if the liability increase, so this is the right side, the basic signal is credit, and liability, if the liability increase, that should consider that credit. So of course the liability will credited here, but the name of the liability we have used, that is accounts payable. So suppose we purchase supplies for cash. So we know supplies is an asset, and asset is increasing, so supply should be debit. And we are paying the cash to purchase that supplies. That means when the cash is decreasing, so cash is also one kind of asset. So we are going to discuss our number 3 example where we purchase supplies. So supplies is debited by 3,000 suppose, that means asset increasing, so debit is 3,000, but we are paying the cash. So cash is another asset and that is also decrease here. So if the asset decrease, that should record as credit. So we can say supplies account debit and cash account credit. So each and every transaction can be find out under this procedure to determine the correct debit and correct credit. So in a short way, we can also memorize one thing. What is that? So who are debits? Whose basic signal are debit? So we can say assets, expense and drawing. These 3 type of accounts basic signal is debit. So as the basic signal is debit, when they will increase they should debit, and when they increase, when they decrease they should record as credit. And the basic signal of credit includes the liabilities, capital and revenue. So these 3 kinds of accounts basic signal is credit. So when the liabilities or capital and revenue are increasing, they should record as credit, and when they will decreasing, they should record as debit. So this is the debit credit procedure of accounting.